Hi, everyone, and welcome to one of the last market updates of the year. Obviously, it's a holiday shortened week before Christmas, and we're recording this on the 22nd, so Tuesday, the 23rd, sorry, of December. So it is still lots going on in financial markets, though. So financial markets don't stop, but let's jump straight into the charts. And we will, of course, start with our the world equity market. So if you just follow my pointer here, as you can see, totally to be expected, hardly any movement, slightly lower now on the FTSE 100 and the Euro stocks on Tuesday, but it really it's the last full day, trading day of the week for most European stocks. And we're not really going very fast. Now, if we just go a bit further to the right here and you follow my pointer again, you can see we've had some pretty good moves. So month to date, there were concerns. We've had quite a volatile December. It's not been a clear-cut picture, but we have had a strong year. But we are eking out gains month to date. So we are at 1.3%, 1.46% for the FTSE 100, 1.3% for the Euro stocks. Bit of a dip in the CAC. The CAC has its own thing going on, what with its concerns about its own budget. Very strong gains there for the DAX, for the IBEX, and for the FTSE MIB over in Italy. So Europe doing really, really well. And actually, if you compare it to the US stocks, which is just up here, then they are outperforming month to date. In fact, most of the European indices are also outperforming year to date. So it's been a really strong year globally for stocks, but we have seen European stocks outperform their US counterparts. And I think that just goes to show that the equity market rally that we've experienced for the last couple of years, is really broadening out as we move into 2026. Now, it should be a good thing, and we could spell stronger gains going forward. If we just go back to the US and what's expected today, if you just follow my pointer here, as you can see, very mixed picture on the futures front, expecting a slight dip for NASDAQ, slight increase in the S&P 500. But certainly as we move towards the last two trading weeks of the year, we're seeing volatility fall. So we've got good conditions really for a Santa rally, even if it is quite mild so far. And we've also got concerns about the AI trade. They're really starting to evaporate as well. Very strong gains yesterday for the tech stocks, the likes of Oracle, the likes of Nvidia. They did really, really well. So some of those concerns that we've seen, they've really come away. But if we move on to global commodity indices, commodities are absolutely stealing the show as we move into the end of the year. Now, I want to show you, if you follow my pointer, we're going to look at gold. Gold is up $40 again today, fresh record high. 4,483. I mean, you can imagine a lot of people are now expecting it to close the year above $4,500 an ounce, 1 ounce as well. So still got that absolute euphoria in precious metals there. But it's not just precious metals, it's also in the industrial metals as well. So copper made a record high. We'll look at that chart soon. But just follow me here to year-to-date performance. Gold up 70%. This is its best performance since 2009. Silver up 140%. Copper, that's up 36%. That's also its best year-to-date performance in well over a decade as well. So some really strong performers there. What's not performed very well, though, of course, is oil. Oil's had a terrible year as OPEC has boosted supply, and we've still got excess supply concerns as we move into 2026 as well. But we have seen oil pick up. Remember, at the end of last week, Brent was below $60 a barrel. Now it's back up above 60, currently trading at 62.22 for Brent crude. And that's been driven by geopolitical concerns. So concerns about Venezuela. Now, I did write about this yesterday. I don't know how long, Venezuela has the world's largest oil reserves, but actually in terms of its production and its supply, it's very, very small. So it may not be able to sustain gains in the oil price for very long. That's why the prospect of the US going to war with Venezuela, sanctions on oil ships and oil tankers isn't having that big of an impact on the oil price, but it has allowed Brent to get back above that 62 level a barrel. Now, just look at this, another fresh record high for gold. It's almost like another parabolic run. After a very steep sell-off in October, it really found its feet again and did move. And I think, you'll probably remember me going on and on and on about this, but it just stayed above its 50-day moving average. And when it does, that just suggests that demand is there. We think that the demand The drivers of the gold price, the drivers of demand for gold are still there as we go into 2026, and we're still bullish on the yellow metal. Even if it was to get, potentially it could move towards that 5,000 per ounce level. And there certainly are some conditions for that. We've got geopolitical tensions, we've got inflation tensions, but crucially, we've also got a huge amount of retail and central bank demand for it as the dollar gets eroded and continues to remain weak. It's also really hard to get gold out of the ground. So it's not like there's going to be a big increase in supply anytime soon either. So if supply stays the same but demand continues to rise, then that's when we're going to see gold increase. And we really have seen a rush into it before year end. Copper's really interesting. Again, made a record high yesterday at just below $12,000 for a ton of copper. So we are, again, very similar chart. We're above the 200, 150 day moving averages. That's a very bullish sign. We've got a lot of open interest in copper as well. So it suggests that demand for those precious metals are really feeding into the industrial space as well. But copper is really interesting because copper is really linked to the AI trade, because obviously you need copper for all the electricity that will power the AI data centers and GPUs, etc. So when copper is reaching record highs, it's probably a sign that the AI trade is back on. So that is also something to watch. Now, I thought, as it's one of the last of the year so far, let's just take a look at how the FTSE 100 is performing. In December, it's no surprise there, Fresnillo, which is a gold miner, Endeavour Mining, gold miner, Antofagasta, gold and silver miner, they are leading the FTSE 100 index this month. Fresnillo up another 41%, Endeavour up 25%, Antofagasta up 23%. So no one is letting go of that gold trade very easily. In fact, it's really pushing it forward. The other key performers and strongest performers in the FTSE 100 so far in December have been Barclays, it's been the banks, we've got Scottish Mortgage, we've got Standard Chartered, and we've got St James's Place, but we've also got some of those real consumer-led stocks. So we've got JD Sports, we've got Burberry. So that really suggests that the rate cut that we saw from the Bank of England last week, that is also feeding into how the FTSE 100 is performing. Now, the weakest, unsurprisingly, you've got Shell, you've got BP, you've got Rightmove, which is the online estate agent house listing company, and that's really been under pressure because of the budget and mansion tax and things like that. So that's still having an impact. But overall, we're seeing a very bullish positioning of cyclical strength for the FTSE 100 as we move into the end of the year. Now, if I do the same for the S&P 500, just bear with me one moment. So this is the S&P 500 in terms of sectors and what's really been driving the S&P 500, because for so long we've seen it being driven by those tech giants. Well, that's not actually been the case. Copper and gold, they're the best performers, unsurprisingly, for December, up 25%, up 27%. We've got passenger air travel, we've got autos, and we've also got some semiconductors. They've also had a decent recovery. But overall, we've got this really big mix. So we've got transport, passenger airlines, we've got car makers, and we've got the precious metals. So it suggests like maybe a little bit of concern, but also kind of this cyclical move higher. Now, later on Tuesday, we are going to get the Q3 final reading for US GDP, and that is expected to come in at 3.3%. So again, ending the year with signs that the US economy remains very, very strong, and that is something to watch out for. Now, just in terms of members, just bear with me while this updates. If we see what are the best performing stocks in the US over the past month, well, you've got Moderna. So that has been a really unloved healthcare stock. We've also got Micron Technology. Do you remember that's the chip maker that reported really, really good results and has really boosted that AI trade as we move to the end of the year. We've also got Southwest Airlines as well. They've been a really strong, solid performer over the past quarter, actually. But if we take a look year to date, so we can see who are the best performers in the US. It's been really, really interesting because it's so different to what we've been used to, really. So just bear with us. Let this just update, and then it will come like magic, and we shall see it all. Here we go. So, look at the top performers there. SanDisk up 569%. Robinhood up 228%. That is a Warner Brothers up 172. Palantir up 156. But it's not the Nvidias of the world. It's not the Apples. It's not the Microsofts. It's more than just the Magnificent Seven. So it's the other 493 stocks that are really playing catch up. And then we've got some real laggards, but Deckers, that's an outdoor company. Lululemon, that's had a terrible time. I think some people think that's kind of not been necessarily badly managed, rather than a sign that the US consumer is falling out of love with athleisure or is weakening in any way. I just also want to show you dollar yen. Been a lot of talk of dollar yen. The Bank of Japan did hike interest rates as expected last week. Bond yields are surging. They have risen to record highs, but the yen has come under pressure to the point where the Bank of Japan and the Japanese Treasury have said that they are going to, they will do whatever they need to do to defend it. Now, the dollar is weaker today, which is a sign that that potentially has happened. If we just wait for the chart to pull up, sorry, everything's a little bit slow as we move into Christmas mode. So we've had a big reversal in dollar yen, but the dollar yen is still very, very strong. The yen is still very, very weak and remain crucially above that 155 level. So 155 is a key level, but I think as we were marching towards that 160 level at the end of last week, there was a real concern there that the Bank of Japan were going to intervene, and indeed they did. So in the short term, a lot of volatility, a lot of dollar downside versus the yen, but the longer term picture remains supportive of dollar yen gains. The Bank of Japan obviously has a big has a lot of risk on its hands, what with rising bond yields, because they're obviously a highly indebted country. But to be honest, we think that's being overdone as well, because they've got enough private assets to more than cover over 100% of their debt. Then that would bring it down to about 130% to GDP. That's a much more manageable number. So we don't think there's any real concerns that Japan is going to go bankrupt anytime soon. But there is a concern with the yen. So these moves here, these two blue candlesticks on the downside, that looks to me very much like Bank of Japan official intervention. But I will leave it there, guys. Thank you so much for joining, and have a lovely Christmas, and we will speak to you after Christmas.